to Trading Lounge and the US indices and a few stocks for the 2nd of March. So we'll look at the Nasdaq and the S&P and some stocks, and the difference with the Nasdaq and the S&P is that the Nasdaq has taken out this low just here, where the S&P hasn't. Also with the Nasdaq here, we can count 5 waves down here. So we need to be mindful that we could have a rally back to the 50-60% retracement level and then another move down at that point there as well. So let's just have a look at these 5 waves down through here. So we'll be counting, we could count the S&P slightly differently than the Nasdaq. Okay, so just be a bit mindful of that. But let's go in and have a look at this on the hourly chart. Here. So from the top of wave 3 here, we can look at wave 1, 2, 3, 4, 5. To me, that's quite clear. And this is our 50-60% retracement level here. So yeah, we need to look at this as a corrective wave up here. But with the S&P 500, it looks like we're going to continue to move up even higher. And yeah, some of the stocks that we'll be looking at will also be, there's a bit of a mixed basket in those as well, in that some should rally and drop and some should continue. So a bit of a mixed bag. So we'll just need to be a little bit careful, a bit practical when you take positions in these markets. But let's just go in here to the tick chart and look at this this space in here for this. You know, normally when if we're using the trading levels, we'd look at 13,000 here, and then we'd look at group 1, which is 10, 20 and 30, 100, 200 and 300 rather in this case. So if we found a tested support on top of group 1 here, so there's normally a little bit of a reaction once it gets there, and then we'll see the first high above the level in that regard. But just getting support on this level here could create the long trades here, but also it could also be a bit of a trap as well for the B wave. So you'll need to be careful, and what I mean by that is just less is more in your position sizing. And then this level here, the midpoint here, the 500, that would also be a place where you could build the trade on, or even wait for the market to get to that particular point, because there will be a correction there as well. But these would be the places to build in on if the market was going to continue up. But it does appear that we've got, you know, nice 5 waves here, so we should see some sort of corrective move to these highs here, failing to get support on this level basically, and then moving down from that point. So looking at it on the tick chart and trying to break it down somewhat. So from the low here, it's a little bit difficult to count it up as an impulse wave here, because, you know, if we looked at this as wave 1 and 2 and 3 and 4 and 5 here, well, then we've got overlapping wave structures here. So it counts sort of better as an A wave, and A, B and C here for the B wave, and up for the C wave here for the A wave, then the B wave, and then looking for 5 waves up. So I can see we've got 5 here and here, and then we've got 1 and 2 and 3 and 4 and 5 coming into here. So we should see some sort of reaction here in 3 waves in due course, and then 5 waves up here, roughly the same size as wave 1, and then an ABC at that point. Well, I mean, possibly, but also dropping from that level there as well. So that's where the long trade would need to go into at that point. Because that would be above the ABC at that point. I suppose we could look at this as 1 here and build a stronger bullish case for the upside here. I'm just being a little bit cautious, because I think that the markets have got a possibility to run higher now. And we'll be looking at that, but I just wanted to sort of clear the Nasdaq up first. So yeah, a reaction here, then a push up here. Once the market drops from here, say the 13.4 roughly, then you'll have that first high above the level as your reference point. So anything above that, then you can move in long at that point. So I'll just move that out of the way there. And when we look at the S&P here, we can look at it, well, we have been looking at it in two ways. We've been looking at it as wave 3, but an A wave coming down, a B wave, and a C wave coming back down here. Now remember that the Nasdaq has taken this low out of its previous wave 4 here, but this market has stayed quite chirpy above, and it's sitting in at 60% retracement level from that high there. So we can also, we've been tracking this one as wave 1 up here as well, and back for wave 2 here, and heading up higher at this point. So we can look at it a little bit differently as well. I think the move across the 4,000 will look as a bit of a classic trading levels pattern, which will be, we've had the arrival, the reaction, and we're looking for the first high above the level, and then a rollover, and then eventually support on it. So that's the pattern that I'm looking for at this level, because we've had our reaction here, and it may not be finished, but if that high gets taken out here, then that makes that an A wave, a B wave, and a C wave here. So yeah, we can either go straight up from here, or we'll have an A wave down here, B wave back up to those highs, and then a move back down at that point. It's going to be a bit choppy all across the level here. It's not like we've also had a nice trend to the upside here as well, is it? You know, I mean, it's all been a pretty choppy affair. So let's just move in here to the intraday and pull this apart a little bit. So this was the other count that I had, where we have wave 1 here and wave 2 here, and then move up from that point. So that's playing out quite nicely here, and it does make this a corrective move here as well. I mean, not as well. I mean, the Nasdaq has got 5 waves, nice 5 waves down, taking this low out here. But we've had to be mindful of this. So it does look like it wants to push up, and it looks quite impulsive in terms of a little wave 1 here and a little wave 3 here, and it'll be a 4 here and a 5 here, and then there'll be an ABC pattern here. So that means that we could also look to go long once that reference point high here comes in. But we have to understand that the market could get quite, well, 4,000 will be quite a sticky sort of number there, so we need to be a little bit mindful of that. But we also don't want to miss the uptrend here as well. So having this pattern here to go long on is quite important here, because what could happen as well is that we could end up you know, it's still in the wave 4 category, so to speak, where the market comes up to this point here, a little bit higher here, tries to find support, and then pulls back down here for one more leg, and then moves up at that point. And this is the pattern that I had here that we'd been working through yesterday as well. So it's just the other side of the coin here. So yeah, an A and a B and a C wave here for the A wave, and then back up for the B wave. So across this top here will be, that's where the important point is here. If we go in and have a look at this on the tick chart, well, 100 ticks, bring a bit more data in. So from the low here, we talked about going long here yesterday, so if you've done that, well then that's good. The other point here too is this is the low here. It doesn't really show a nice impulse wave here. It's more corrective. This is okay as a corrective pattern. Do we include that in this side of the trend? I think we do, because all of this would be, yeah, this would be 5 waves down here. This would be a wave 4 and wave 5. So this looks a little bit corrective here. So it can play out as an ABC pattern. So if we look at this just going to work through the problem really. So if it was going to be an ABC pattern, it would be like this here. So that would be the A wave, the B wave, and the C wave here. Now, with this here, if we can borrow these here, we could, that's probably there. There, that would be 1 and 2 and 3 and 4 and 5. So that will be the third wave here. Don't need these guys. This will be the fourth wave and the fifth wave. So let's just take that up a little bit higher through here. So just really working out where to go long at. So wave 5 can come up here somewhere, which would be roughly the same size as wave 1 because the extension's in wave 3. So that would leave us with this top here, and this would be the top to move in on over here as well for this one. Whoops, a daisy. Well, that one, and that second high here. If you moved in here, then that's good, but you'll need to. I think it's probably a good idea to take a small, some sort of percentage off the table here. Get to break even or cover your costs, whatever. Because that's where it can fail, okay? And then if you use that high and the second high here, then that will take us, there'll just be a dance across here, then that will take us up higher at that point. So that would be the way to navigate through that. So they're the situations that we have. So this little pattern here is, if I just bring the Nasdaq back across, is the same here as well. We've got wave 3 here by the looks of it, and wave 4 and wave 5. So we just really need to get past this little top here, and then we'll realize if we're going to be going higher. It's the same here as well, wave 3, 4 and 5 here. So if you can kind of work those patterns, you should be pretty safe, but you need to be on over this side to go long. And yeah, like I said, if it's going to fail, this is where it's going to fail from here and here on this one. So yeah, that's that really. Let's just, we could recap this a little bit just to get on the same page. What chart shall we use? Go to the 4-hour chart. Yeah, I know it's a bit tricky when you're working two counts, but yeah, so yeah, it's all about these. It's all about the trade setup, really, isn't it? When you sort of nut it down to it all. So yeah, just have to wait for those to finish off here. Let's have a look at some stocks and see how they're going as well. So first one is Tesla. So with Tesla here, there's two things that we can look at here. And this is the same as, I think there's another stock like this too, in that we've got this move down here, which we can look at as the A wave, the B wave and the C wave here, and then go long above that high here, and we'll take a closer look at that. But otherwise we'll be looking at 5 waves down, so 1 and 2 and 3 here and 4 here, and then coming down for wave 5 here. So if we do get 5 waves down here, then we're going to get an ABC correction here, and then we're going to have 5 waves down here. If we don't get 5 waves down here, then we're left with just 3 waves here, and then we need to look in to go long at this point. So that's what we'll be looking at here. And there's another stock like this as well. I can't remember which one it was now, but just going straight to the tick chart in all of this. So as I mentioned, we can go wave 3, wave 4 here, and then down for wave 5. Now it is possible to count this one up here as 5 waves and have it as wave 1 here. So it's possible to have this as 1 and 2 and 3 and 4 and 5 here. So it's possible to count it as 5 waves and then down for the A, the B and the C wave here, and then start building up here. So we've got the same thing with with this stock as we do with the Nasdaq and the S&P. So what we can do is that we can look at it as wave 4. We could look at it, and wave 4 can be an A wave, a B wave, and a C wave here for wave 4. So we put this, let's copy this and put wave 4 over here for this as well. Of course, these would be counted a few degrees higher, but the point being here is, like the Nasdaq and the S&P, if we count this as 1, ABC for 2, 3, 4, and 5 here, and that will put us up at the 730. So the 30 is a top of group 1. So if we get a tested support there, a little bit like this one here, so we could have gone long above this one, we could have gone long above this one here, so we'll be looking for the same thing over here as well, okay? And once these 5 waves are finished here, it'll pull back here. We can use the second high here as well, but what it can do here is it can just continue to move down here as being going down from wave 4 down to wave 5, and looking this as an A wave, a B wave, and a C wave here for this. And then drop from there. So yeah, that would be the long trade over this side of it here. If you can't get any of this and you see that we're getting support on the midpoint, the 750, well then you'll need to be long from that point there anyway. And also too, if you were long down here, then you'd also want to be adding on top of the 50 as well here. You need to be building in at the beginning of the trend. So that's the other point over here for this. So first of all, we need these 5 waves here to complete and then drop. And then you'll be left with that high, and you may be left with a second high that you could work with as well. Another way to look at this is just working the 730 here, the top of subgroup 1, as the tested support, and then going from that point there. But yeah, anyway, that's where that is for Tesla. And Lending Tree is the next one here. So with Lending Tree here, we were looking at this being corrective here as an A and a B and a C, then wave 1, an A and a B and a C here for wave 2, and then wave 1 and back for wave 2 here, and then moving up. It's possible that there can be a wave B here where all of this comes down as the A wave here, then an A and a B and a C wave here, and then we come down further from this point. So that's always been sort of haunting me a little bit, and to see this move down so quickly, it would sort of put that B wave into play at that point. The stochastics are really quite low here, so we should see a bit of a snap back, which is one good thing. And what we'd be looking for here would be, we're just waiting for support to come back onto the 300, and then we'll look to build in long trades over this side, and we'll need to see if we're correct at that point. So wave 2s are normally swift and sharp, but that's a little bit too sharp. But still, we can still work that as an ABC here, but we do need to now see it over here for this. So we'll just continue to monitor that. And Facebook. So a little bit of a tricky count, this one here. We've had this wave 4 sitting over here before, and we may need to do that again, because when I had wave 4 sitting over here, I had this as wave 1 sitting up here, this blue wave 1 here, and then having this as an A and a B and a C wave here. And I just assumed that we're just going to break through here. But if we don't break through here, then it really leaves us, in a long position, above these highs here. We can get a better position than that. But I'm just saying, if that moves up there, then it makes this here an ABC pattern here. And this could also be finished here as well as a wave D over here. So a triangle pattern, and having wave E sitting here as well. So there's a couple of variations with all of these patterns, but basically what we're looking for is that if we do see weakness, then this is the pattern that we'll be looking to the downside on, as wave 1 and 2 here, and 3 here, and 4 here, and 5 here. But if we see strength come into it, then we'll need to have a look at the long side for this. So on the tick chart, we'll have a closer look, I think. See, it can be counted down as an A wave, a B wave, and a C wave here now. So, but this C wave here can also be counted realistically down as wave 1 here as well. So as wave 1 here and 2 pulling back in here. So, but you would think that it would push up with the Nasdaq and the S&P, but we're not out of the woods yet. So this, I'll put this trend line in here because they always seem to work quite well. Looking at this as an A wave, a B wave, and a C wave up here for this. So one of the ways I thought that we could, not miss the trend, I mean, because I've got to work out where I'm wrong and what I'm going to do about it, right? So what I'm going to do about it is that we're in group 2 here. We've got the medium level here and the major level here, and then we've got minor group 2 in here, the 65, 72, and 80. So if we get support on the 72, a classic trading levels pattern, the arrival, the reaction, the first high above the level, then we'll look to go long at that point. That's how we'll solve that problem. But otherwise, we'll see this continue to the downside. The next one is Square, and with Square we've got a pretty clear, this is a daily chart, sorry, we've got a pretty clear 5-wave structure here. So we're looking for a rally off the low, so it's starting to work into that rally to a 50-60% retracement level, or closest largest number, the 250 here, the medium level, and then down again from that point. So let's just check that out. I think I've had that on the tick chart. So yeah, so from the top here, we've got wave 1, ABC for 2 here, and then we've got the third wave down to this point here with 5 waves in it, 1 and 2, nice strong third wave. Fourth wave bounced really quite high here in this case, then down for 5 and 4, and then 1, 2, 3, 4, 5 here. So we've got, it looks pretty clear that we've got 5 waves there, so we should be looking to make some effort up into this space here and then see another 5 waves coming down into the 200 here at least. And we'll just check out the speed of this one here, because it could be an A wave and a B wave and a C wave here, or it could be a wave 1 here and back for wave 2 here. But either way, we're not going to go long here in this one, because this one, and I can count this in different ways, but let's just see how it gets treated up at the 250 here first. We've got a couple of sessions for this before we need to take any action on the short side. And Apple was the other one, the same as Telstra. So we can count this down here as an A wave, a B wave, and a C wave. We can also count it down as 1 and 2 and 3 and going back for 4 and then going down for 5. So if we do get wave 5 coming down through here, then we'll have 5 waves here, and that means that we'll get a 3-wave counter trend and then another 5 waves down here. So it's both valid, these are both valid as an ABC here, and then just continuing to the upside, or we're going to go into this 5-wave thing. So this is really quite simple. So we could go long on the 130 as a support. Let's just go to the tick chart and check that out. I mean, we could count it from the low here. Is that the low? Just double check, sorry. The low's over here, that was good. Yeah, so we can count it down as an A wave, a B wave, and a C wave, and finish here for a wave 4. I was never really that happy with that, because this move through here appears to be in 3 waves. So that sort of told me that the market's corrective as an A wave, an A, B, C here for the B wave, and then going up for the C wave here. The C wave would be 1, 2, 3, 4, 5. So we'll just label this. So we've got looks like the 3rd wave, 1, 2, 3, 4, 5. So maybe a little bit more up there for that. Back for the 4th and up for the 5th. So yeah, look, it's a bit like the other markets, you know, the indices that we're looking for wave 3, 4, and 5 up here, and then we can just look for the corrective move here. That's either going to come back down through here because of, let's just label this out here. I mean, we don't know if it's an ABC yet, but the main point here is that once that high comes in, the first high above the level, so the classic trading levels pattern, probably the arrival, the reaction, the first high above the level, the ABC pattern, and then we can go long from the second high or the top high over here for that, and that will keep us safe at that point. I mean, maybe the cash market's got another high in here or something. He's got to double check these things. But anyway, 130 is a tested support, is the long trade here for that. That will take us up from that point. And Alphabet, one of the stronger stocks. This is just the tick chart here. I've got a few different counts on this, but yeah, the main takeaway here is that if we get a support on the 2100, so we'll also be looking for a classic trading levels pattern there. So as it moves up this time here, right, it will bounce off that because of the old high and the supplies there, and then it will give us the first high above the level and probably the second one, and then you can move in on the long side. So let's just, rather than just take that high out, just refine that entry a little bit, because it could save you. That's because we could have this down as wave 1, an A and a B and a C wave coming in here and then failing from that point. So that eliminates that problem. Okay, we're already long in here on the daily chart, but it's a chance to add to this here for this. So we're looking to add here. So we're just refining what we're doing at the 2100 for this. Okay, pretty simple. And Amazon. So where are we up to with Amazon here? I mean, the thing I like about Amazon, what it's telling me is it's telling me that all of this is corrective, and then at some point we're going up to 4,000. And that's telling me that, well, if that's doing that, well, then the Nasdaq's going to go higher, and of course the S&P and so on is going to go higher. So it's just really about how do we count this here. And a triangle makes a good case. There's other cases as well. So with the triangle case, we can look at it as wave D here down to wave E here, as an A and a B, and then 1, 2, 3, 4, and 5 here for C of E of 4 here. If we're going to go down further, then we just need to be mindful, because we'd always get a bounce off a large number. So seeing a bounce here is not really, to me, is not really a sign of strength. It's just the natural flow of things. So in this case, I think we should go to 3,200. Let's let the market prove to us that it is starting a trend to the upside. And yeah, because if I was looking at this here as down for 1 here and 2 here, and looking at this as 3, it's a little bit hard to do. I could, yeah, it's a bit tricky. But wave 4 shouldn't be sitting above this wave 4 here. Okay, I'll put it this way. Wave 4's come back to the wave 4s of 1 lesser degree here. So we could look at it like that here. So I could put that here. So if this moves up here and gives us the classic trading levels pattern, the arrival, the reaction, the first high above the level, and then the ABC, then we can go long from here as well. That would be the safe trade at that point. You could also have gone long here as well, like this was resistance here. So the arrival, the reaction, the first high above the level, the correction, so you can go long above that high, above that high. You could probably even work it in here. So if you're long here, then you'll just keep the stop out of the way in this area through here. I'm just saying, you know, just it's hindsight, but we'll be doing much the same thing over here with this, but we've got time. We'll pick this up tomorrow and we'll get that entry sorted if that's going to be the case. So yeah, we'll tune in tomorrow for that. Rightio, I'll leave it at that. Thanks for tuning in. Cheers.